To watch crypto go from 19,000 to, I think it got to almost 29,000 in the span of a couple of weeks is proof positive that that people do believe that it is a store of value, that the developers, the coders, the programmers who have built in this mathematical metering are not going to change it. So it's a store, its role, it's playing one role of money. It's a store of value. There are others trying to leverage on top of the Bitcoin network and make it less expensive.
In this video, ARK Investment Management CEO Cathie Wood argued why investors are considering crypto assets in response to the economic crisis. Since the failure of the banks Silvergate, Silicon Valley, and Signature, sentiment toward Bitcoin has improved. Wood highlighted in her recent tweet that, ironically, as crypto assets soared during the Silicon Valley Bank meltdown, this administration suggested that investors in regional banks' equity and bond holders should prepare to be wiped out in the aftermath of an unprecedented 20-fold increase in the Fed funds rate. According to Coin Gecko data, Bitcoin has increased 43.6% since its most low point on March 11, compared to a 25.3% rise in the whole cryptocurrency market during that same period. In her previous interview, Cathie Wood addressed that it was pretty educational that Bitcoin reacted so differently from the stock markets in particular. According to Cathie, it has taken another crisis for people to understand that the crypto network's decentralization and transparency means that it has no central point of failure. Before proceeding further in this video, make sure to click on the subscribe button below to stay updated with our latest content.
The inflation rate is 1.8% per year. That's how much is mine. In a couple of years, that will be cut in half to less than 1%, and it'll keep getting cut in half until we reach that 21 million. We're at 19 million units right now. As this regional bank crisis came into full focus, it was fascinating to see Bitcoin and other crypto assets appreciate as regional bank stocks were imploding. They are just like gold. That is right.
Since last year, ARK Invest founder has been warning about the potential for the Federal Reserve's aggressive interest rate increases to destabilize the financial system and trigger deflation in the U.S. economy. However, Cathie Wood predicts that a surging economy reminiscent of the Roaring Twenties is likely to follow once the Federal Reserve pivots, with innovative technologies like blockchain leading the way. With higher interest rates, investors and regulators are closely examining the banking system's resilience. Would explain how businesses and individuals are now taking measures to hedge their fiat assets with crypto assets, resulting in risk reduction and increased returns by moving from low-yielding bank deposits to higher-yielding money market funds.
And now around this banking crisis, I think all of those variables, the credit default swaps, inverted yield curve, were pointing to two mistaken assumptions in the banking system. So I'd love to get your reaction to this. One was that during COVID, when we were worried about a depression, that a lot of banks that were being flooded with stimulus payments were taking that money and investing in safe securities, their government-backed mortgage securities, treasuries, and everything. But they invested long-term, put in the held-to-maturity category. And in the case of Silicon Bank, they were earning really 1.6% on that book. So what was the assumption they made? They made the assumption that, gosh, we're probably going to be fighting a depression here. And surely interest rates are not going up anytime soon.
Correct.
So that was the first mistake. And then the second, and it was a pretty good assumption, because we've never had now it's a 20-fold increase in interest rates in less than a year. If you go back to Volcker, it was a 2-fold increase, 10 to 20%, that shocked the system. And what I like to say is, the system is being shocked, because more so than in the early 80s, because we had 2 weeks ago an inversion in the yield curve of more than 100 basis points. So more than 100 basis points on 4% is a lot different than more than 100 basis points on a 15% interest rate. So I've likened it to the Richter scale. So back then, if you look at 4% over 15, that's 6.5 on a Richter scale in terms of earthquake. If you look at 1% on 4% or 100 basis points on 4%, that's a, well, what is it? That's a 25 on the Richter scale. Which
the recent closure of Silvergate's SEN and Signature's Signet network has exposed the crypto market to liquidity risks. Despite this, the tech industry continues to be battered by climbing interest rates. In fact, the Fed recently raised its federal funds rate target from 4.75% to 5%, marking the 9th increase in about a year. The fractional reserve banking system, which allows banks to hold only a portion of customer deposits, has been successful for a long time. However, bank runs occur every decade or so when a majority of depositors decide to withdraw their funds simultaneously, revealing the system's vulnerabilities.
We are in a banking crisis. I was listening to Jane Fraser or reading what she said recently, which is, this problem that we're having right now is very isolated, just a few banks. There aren't going to be many ramifications. It's all under control. The Fed's on it. The FDIC is on it. And as you know, I've been quite concerned about Fed policy generally, and now the banking system. Second big mistake that Silicon Valley and these other banks made is that deposits would not go down. We haven't had declining deposits in the banking system for the latest I've heard is 48. If you look at M2, we haven't had a negative M2 on a year-over-year basis since the 1930s. So part of that, 85% of that, is deposits are leaving and going to money market funds. Or in the case of these, watching Silicon Valley banks, customers waiting outside the bank. These are high-tech investors, and they're waiting in lines to go get their money physically. What does that tell you? Maybe they put some of it under the mattress, when they came out. So deposits are leaving the system, interest rates up 20-fold in 1 year. This is a major, major shock. And it doesn't seem to me that the Fed is acknowledging that the banking system is under duress here.
Despite deep losses in the past 2 years, ARK's portfolios are not giving up on growth, tech stocks, or crypto, according to Cathie Wood. Despite the challenging macroeconomic environment and hawkish central bank policies that are affecting these investments, Wood remains optimistic. She criticized regulators and the Federal Reserve for failing to prevent the current bank run and using cryptocurrency as a scapegoat for their supervisory failures. On this note, we conclude today's video. Do you agree with Cathie Wood's perspective on the current financial system? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will continue to bring you more updates in the future.